Hi everyone, welcome to a brand new episode of Women of Community Banking podcast. Today is what? Wait, Thursday. Thursday morning. Good weather out here in New York. So I'm just staring at the Hudson and I'm talking to this wonderful lady in front of me, Stacy. The first thing, guys, if you haven't checked, check our LinkedIn DP. It's uber cool. She's amazing. Who Stacy is? A quick introduction. Stacy is the Chief Experience Officer of Amplify Credit Union based in Austin. She's been there for the last close to 8 years, and prior to Amplify, she has a illustrious career in the agency world. She spent almost close to 17 years in a agency, Pierpont Communications, again based in Austin. So she has mix of both the world, running a part of the agency, running client accounts on one side, and then she transitioned on to Amplify a few years back to lead the experience to Amplify, right? I mean, I know, Stacey, I haven't done justice for your introduction. I cannot probably summarize your 2 decades, more than 2 decades of experience in 2.5 minutes. Not possible. So if you want to add something, feel free.
So that's a fantastic introduction. I can't think of what I would add. And knowing that my LinkedIn is deemed uber cool, I am very excited about that. So I'll go with that.
I'm sure people might have told you earlier. If you have, if people haven't, it's their loss. I don't know. It should. It should.
Excellent.
Stacey, let's start with your journey. So why don't you talk about your journey so far? How did you end up being in credit unions, and how did you start your career?
So my career started actually in college at the University of Texas. I have a Bachelor of Science in Public Relations, which I like to tell people is I have a BS in PR. And yeah, if we were having cocktails, I think that would get a pretty good giggle.
That's interesting.
Oh, I tried. And so I started while I was still in college, I started as an intern with Pierpont and stayed there until I guess it's almost 8 years ago now when I joined Amplify. So I became a banker sort of on accident. It was not a
Sure.
plan, but I actually had worked with Amplify, and there was two executive level departures. And the role that I have today is sort of a combination of the features of those two roles. And so I have now been the chief experience officer here for going on 8 years, which has been a wild ride. So the banking world from 2018 to today it's had about 4 or 5 different cycles. So it's been an interesting time to become a banker.
Yeah, absolutely. I mean, that's a very well summary of your career. Yeah, I mean, the way how you defined yourself in 2 syllables to start with. Yes, that was uber cool. That was even more cool than your LinkedIn DP for sure.
Thank you.
Fun, right? So you spent almost what 17 years in PR and the ad world, and then you moved on to the credit union ecosystem. Right? What surprised you when you came to the ecosystem? You actually took the driver's seat, to the took the wheel at your own hands, and what was most surprising when you actually took the leap?
I think what surprised me most when I got into banking is there's a lot of what we call conventional wisdom in
Hmm.
banking. But then
Hmm.
if you start asking questions about whether these things that we just sort of accept as truisms in this industry, when you start asking questions, do we see that in our business? Like, do we see that in the data that we say these things are
Hmm.
true about what people want, the way people behave, etc.? And then you say, okay, is that what we see? What I realized was not necessarily. Sometimes, but a lot of times it's
Sure.
not. And so I think probably what surprised me most is this is such a long established industry, but it is ripe for new perspectives and I would say just asking naive questions and then making decisions based on the facts and data that you see as opposed to the opinions or even the actions of competitors.
Yeah, I mean, the best thing within the entire answer was asking naive questions. I mean, I'm so dumb. I mean,
I
you are
don't.
you. Yeah, I'm so dumb. So when I came to the ecosystem, same for me. I mean, 3 years back, I didn't even know that credit unions don't talk about EBIT. Credit unions don't talk about CLTV, or credit unions don't even talk about margins. I was like, what? I mean, can you? I came from the Fortune 500s of the world, and then I came. How do these guys even work? So I asked naive questions. I naive, stupid, idiotic. You can have multiple adjectives to everyone. So guys, how do you work? So yeah. So people have been so kind and honest and welcoming in the ecosystem. They welcomed me, taught me what credit unions are, and I'm not going back. And for the last 3 years, I always say I drank the credit union Kool-Aid. I think I won't be able to go back working for anyone else. So yeah, very similar. So
Absolutely.
thank you for sharing.
Well,
Thank
and
you
if
for
I can
sharing
offer
that.
a perspective on, there's a few things that we credit unions
Sure.
do that I think are really great, and there's some things that we do that I think we could choose to rethink. And one of those is that we don't talk about margins. We absolutely should talk about margins. So one thing that I would say, one phrase that we've adopted at Amplify is revenue is not the reason that we do what we do, but it is the evidence of our mission well delivered. And if you don't have a strong profit margin in your business as a credit union, just because you're not a for-profit enterprise, that means that your ability to sustainably deliver your mission is in jeopardy. And so there are some things that I think we credit unions could bear to have some new answers to when we ask those questions. And that's one of them.
100%, right? At the end of the day, you're running a profitable business, right? I
Mm-hmm.
know it's a mission, but again, unless you run a profitable shop, you're not able to help either the consumer or the community, because unless and until you're net positive, if you're losing money every year, it's not helping. I mean, it's not helping anyone, right?
No,
So
and you're living on borrowed time. If that's how
yeah,
you're operating, you're living on borrowed time. And so if you really do believe in your mission and you believe your mission is something that should sustain over years, then you need a profitable business to do it.
yeah. Otherwise, a Chase or a Chime will eat your lunch for sure.
Yep.
They already are, but yeah, I'm glad. It's very rare to find, I would say, someone who thinks across similar lines, because you came from the agency side, so I think you've got that external perspective of how the world works, for the lack of better words. I mean, people will hate me, credit unions will hate me, but that's real, right? I mean, we are not.
Well, and I've got to give credit to our CEO for that as well. So our CEO he spent, before he came to Amplify, which he's been at Amplify, I think 16 years now, but before he came to Amplify, he spent his entire career in mortgage and commercial banking. And so we have now an interesting blend of, we've been a credit union for, I think, 57 years now, and we've had leadership for a decade and a half. And so we're this unique animal of, we look at the world from a mission-driven perspective.
Yeah.
And also
Yeah.
we bring the business fundamentals to that. And so I find it a really strong combination.
Yeah, I mean, that's really what differentiates an average credit union from a growing and profit-making and forward-looking credit unions. Because I have seen credit unions who are there around for hundreds of years, but have been still around a couple of millions in assets and haven't even reached a billion. I mean, no wrong to them. Absolutely, you're doing great, but you're sitting on a ticking time bomb.
Yeah.
It's not easy.
I agree.
Yeah. Now, I mean, again, with your work, I think you run a bunch of things. You run like marketing, I believe, marketing, retail, payments. Do you also run HR by any chance?
I do. Yes.
Is there anything that you do not run in the credit union? Let me ask you, like marketing, retail, payments, HR, like what's rest?
So the
Operations
way
is
I
something
like
you
to
don't
say
run.
it is I'm responsible for demand, deposits, payments, and people. So all the functions that involve all of those things. That doesn't include lending. It doesn't include IT. So roughly speaking, that's sort of the realm, the theory there of, it's sort of an unusual blend of responsibilities in banking. The theory behind it is combining the people who make the promises to the customer, the employee, and the community with the people who have to keep them. And so I spend most of my time sort of going back and forth between all my various teams of, here's what we think we're trying to accomplish for the customer. Here's what we're trying to accomplish for the business. And here's what we think we're going. And now, does the fulfillment actually match that? Does our operational capability actually enable us to deliver it? That's what I spend most of my time doing.
Well, so my question was actually, very much tied to that, right? So how do you keep like all the bunch of teams aligned with one single member experience? Because the biggest problem is member experience. Siloed, fragmented member experience across different products, because they've got different LOSs, different CRMs, different LOSs, different moving parts. Nothing is, in the same place, right? I mean, it's always changing.
Absolutely.
And one of the worst things, I talk about credit unions is, and I talk about very openly, if you can buy 5 different CRMs and 5 different LOSs and stitch all of them together, nothing of them will work. You have to go and unify your member experience at one single point. Otherwise, you're still throwing spaghetti on the wall and trying to, put band-aids on it. Something will fix. So how do you keep all of them aligned together to ensure one unified member experience?
Well, interestingly, we aren't aiming for one member experience. So what we're aiming for is the member experience that the member wants based on the channel they've chosen. So So we have design principles that guide what we're designing each of our channels for. So, and by channels, I don't mean, various different systems. I don't mean different product lines. What I mean is
Sure.
how the customer chose to show up to us. So our design principle, for example, for online service is availability and efficiency. So if you chose to go online to do whatever it is you chose to do, did you choose to start your loan application? Did you choose to open a deposit account? Did you come and visit your money at 3:00 in the morning in our online banking system? Whatever it is you chose to do, you want it available. It needs to work immediately. It needs to work quickly. It needs to work fast. So across all of our areas, if our customer chose online, that's what they're working for. Our design principle for service by phone is empathy and effectiveness. If you picked up a phone to call us, the first thing you want, like you probably didn't call to compliment. That's probably not why you picked up a phone. You either needed to accomplish something and you preferred the phone or you couldn't do it online. We hope the number of things you can't do online is very, very small, but you chose the phone for a reason, or you got a problem and you need us to hear about it. So empathy is first, because it doesn't matter how quickly we can solve your problem, because you need to feel heard and understood before we solve your problem. And then effectiveness is second. Notably absent on purpose is efficiency. We are not optimizing service by phone for efficiency, because if I was, I'd be getting you off the phone as fast as I could. I don't want that. I want you to have to call back. And so I'm going to optimize effectiveness. I'm not going to optimize for efficiency. And then lastly, for service in person is connectedness and confidence. So people are in our world, we hope you chose to walk into a branch or pick up a phone, because you should, besides spitting out cash, this phone can do almost everything for you. And so you made a choice to walk into one of our branches. So you either you wanted that connectedness, or you needed confidence that maybe it's the first time you've ever applied for a home loan, for example, or you've never opened a new business account in a new city because you're 26 and this is the first time you've done it. You're looking for confidence. It's not that you can't do it online. It's that you chose to do it in person because it was unfamiliar to you. So that's actually, as we look at what I would characterize as sort of a cohesive member experience, the way that we aim to create that is being very clear about what we're trying to deliver best in each of those channels and optimizing accordingly.
You almost answered the entire question flawlessly. On your second point about, I would say preempt needs of a customer or a member, right? I mean, what is the reason for which I might want to walk up to a branch, or I want to call a contact center agent, or even if I have a mortgage, do I even need a HELOC or not? I mean, believe me, I won't name a bank. It's not a credit union. I don't even have a mortgage. I'm somehow included in a mailer where they send me HELOC rates every month. I'm like, what's wrong with you? And so that's what you're trying
to drive you crazy, because you know what the possibilities are for segmentation and personalization and whatnot. That has to drive you crazy.
And me being a data scientist, I hate it. I'm like, guys, go fix data. Get the segmentations correct and contact strategy correct. I mean, I'm not your contact. Interesting. So that's a good way of looking at it, right? Now, about the mission of Amplify right now. Now I know there are interest income and non-interest income, and a good portion of our income is non-interest income, be it overdraft, be it transaction fees. So Amplify has made a bold move, right, to fee-free banking. Essentially, you don't want to charge anyone. That is not, I would say ethically not right, for the lack of better words, right? So you want to be more ethical. So how did you make this case internally to make this actually work out? Because all of us want easy and quick money.
Absolutely. So interestingly, we made the case on the basis of the financials. So the short version here is this started as a marketing idea. We did some original research. We were trying to figure out what would finally make somebody change their core deposit accounts. What makes you finally leave that institution that you don't like and go to somebody new for your checking and savings? Shock of shocks, fees or rewards. Surprise. What was really helpful though, what was the actual useful insight was on the fees side, what is it about fees that actually makes somebody make that change? It is not because somebody quote unquote can't afford a fee. It is because it is the concept of fairness. They don't feel like they should have to pay a fee. They feel like somebody's taking advantage of them. Now they're mad. And when you're mad, you're much more likely to make a change. So it actually started from there. But what we found when we dug into this, well, how much are these fees? What do we make from this? What part of our financial picture is this? What we learned is who pays these fees. These fees are overdraft. Any banker listening, please, go look at your non-interest income and find out what percentage of it comes from overdraft income. If you're like any other institution, you're going to find out it is the vast majority of any account driven fee income that you have, the vast majority is overdraft. And so what we realized was that that's not how we want to make money. That is not that we're a mission driven organization, and our mission is to improve the financial lives of our members and the strength of our communities. You don't do that through overdraft. And so it took us 2.5 years to put together. We started with the financial case. What we actually found was if we can earn more checking and savings accounts, we get them to activate debit cards, we can improve our net interest margin and we can get more interchange income. So we can actually come out net positive versus collecting all of these fees on the financial basis. So that was the case that we made within our organization and to our board. We did a ton of analysis around it because nobody's done this before. And so we were very worried about, are we correct about what we're anticipating? But what we really found was this has become a huge part of our mission. Because when you sort of surface this, and what I tell people now is they say, oh, but it's a member service. How are you going to cut that off from members? And I say, no. We still offer overdraft protection to all the same limits we always did. So members still have this service. They just don't pay for it anymore. And then everybody says, oh, you must be charging off accounts like crazy. No, we're not actually. We actually have fewer charge-offs from overdraft today than we did when we took overdraft fees. And what's interesting is only we bankers could be surprised by that, because here's what happened. Somebody was in a financial hole and we did not dig them deeper with overdraft fees. Why would we be surprised that they climbed out more successfully? That's what we're seeing in our business. And so what we've decided is I would love for this to become the standard. I would love for this to no longer be a competitive advantage for Amplify. So far, to my knowledge, it absolutely is. To my knowledge, I have not encountered another entity that has entirely fee-free banking in the way that we do.
I mean, that's 100% true, right? I mean, interchange income is enough and interest income is enough to take you to net positive, and removing the onesies. These are not onesies and twosies, but it's about ethics, right? I mean, if you do it right, a member will stick on to you and bring in more money. So like a better words, right? And then charging them for overdraft. I mean, that's one of the most horrible things that you can do. Interesting. So that's a good way of putting together, Stacey. And I'm sure that you have had a lot of effort put together for doing this and convincing the board, right? Interesting. Quick rapid fire, right? In the interest of time, we've got a couple of more minutes. One, best part of being a CXO.
Ooh, the best part of being a CXO is you learn something new every single day. So being responsible for such a wide variety of different things, I learned so much. Like one day it might be I'm learning about what new payments we're getting now that we can receive instant payments. And how does that differ from what we get through our other payment rails? And who's the customer that really appeals to, and what should that be as part of our strategy? The next day, I might be learning why we can't do this thing that I really want to do, that is a customer innovation, and it has to do with a tech stack that is, integrated in so many different layers, and something that feels like, that's so easy, we should totally do it. And we find out like, no, we can't do it. It is so wide ranging. And other times it has to do with, here's what's changing on the industry regulatory side. Here's what's happening in those places. So something new every day.
Fair enough. Digital banking or in branch?
Yes. That's my answer. And my answer to that, I'll tell you why. We have found Gen Z prefers to walk into our branches to open their accounts 4 times as likely as baby boomers.
I know, absolutely. I am not Gen Z, I'm Zillennial. I'm like almost Gen Z, but on the starting of millennial, I'm like 31, 32. So absolutely, I need a branch in front of me to look at where Citibank is or Chase it. I mean, I'm a customer of Chime, but to your point, exactly, well taken. Again, your love for Austin, since you've been there forever. So best part of working in Austin?
Best part of working in Austin, it is a dynamic city. It is growing, it is dynamic, but it is also a place where people really care about each other and they want to know who you are as a human before they are worried about who are you based on your title or your company or quote unquote how important you are. It is, I've spent basically my whole life in Texas. I grew up in the Houston area and I used to work across all the big Texas cities when I was a consultant. And I would tell you that is the unique part of Austin. It is a thriving business culture, but it is one that centers humans before it centers titles.
Perfect. So you've sold Austin well to me. I'm done. I'm sold already.
If you want to know more, check out changingaustin.com. It's my podcast. I mean, if I can just put a little plug in there.
Absolutely. That's brand integration, guys. Learn from it. One superpower.
One superpower. Oh, I would love to be able to get a restaurant reservation in Austin anywhere I wanted at any time I wanted to.
Wish. Those are wishes even I have, right? Tomorrow I want to go to Din. I mean, I love Din Tai Fung. In New York, you're trying to meet and I'm not getting a reservation. So yeah, I mean, I 100% agree to you. This superpower is even what I want. I cannot wait for lines and queues and days. Yeah, all that.
Absolutely. I don't need to fly. I don't need to read people's minds or,
Uh,
solve world hunger. Apparently, I just want to dine well.
Last question. One word to describe Amplify's culture.
Transparent. And my one word that actually comes from our employee survey. And so there's a word cloud that comes out of it. So that's not just my opinion. That's what our employees would say is the most common description of it. And that actually is reflective of, we have a philosophy called radical transparency, which means unless there's a reason you shouldn't know it, we're going to tell you. And the opposite being, we don't have a need to know culture. That I'll tell you when you need to know. I'm going to tell you everything and anything that you will listen to unless there's a reason I shouldn't, because we believe democratization of information puts the power in people's hands to do what's best for the customer.
Stacey, this was great. I would say refreshing podcast. I didn't know that you did also run a podcast. That's interesting. That's a separate conversation to have, and maybe we can do some collabs. But Stacey, this was great. Thank you again for taking your time today, and we really appreciate it.
My pleasure.